Hey guys, nice to meet everyone. Admittedly, this is the first time that I am doing a presentation specifically on data monetization. So I've never run through this before. And like most of us, probably I procrastinated until like a day beforehand. And so I just finished it. So I'm not sure what's going to come out of my mouth, but probably a lot of good stories. And feel free to pop questions in and I will get to them. So a little bit about me. I founded my first company in 2014. It was in the healthcare space, and most of my role there was, after the first couple of years, really leading the company into data monetization. So first a data strategy, and then in the data monetization strategy. Over the years, I have been an advisor for a number of startups and even larger enterprises. I host a few universities lectures on data, typically on data and entrepreneurship every semester. I am usually working in the data strategy and data monetization space when I am advising or mentoring companies, but I'm also just like a general startup mentor as well. I founded my first fintech company, Gulp Data, in 2021, after having my experience as a founder in other industries. So essentially, I learned a lot about data markets and data monetization. And even after building data strategies that became the leading source of revenue for companies, it was impossible for capital providers and potential acquirers to recognize the value in those data assets like they would any other intangible or tangible asset. And that seemed wild to me. So started Gulp Data, which has started lending on data assets for providing SME loans using data assets as collateral. Right now, we are focused on deploying capital and performing valuations. We're aiming to fund and value over 1,000 companies. I also have some experience as an investor. I launched a fund that focuses specifically on health tech. Not sure that's so relevant here, although I do a ton of data strategy advising for the companies in that portfolio. So a little deeper into the clinical data edition of my data monetization experience, so you have some context. When I worked in the healthcare industry, it was not new, but new for smaller companies to begin monetizing data assets. So oftentimes what happens when you're building a company is you're focused on building the product, right? And distributing the product and securing not only your go-to-market, but your product market fit. And founders and executives oftentimes don't look at the byproduct of those products, which is often data, as a potential revenue stream. And so that's most of what I focused on when I worked in healthcare. And so a lot of my experience comes from working with the different stakeholders in the healthcare industry, specifically the ones listed here. So this is all completely ethical use that was really exciting to lead these initiatives and learn how a lot of this works. But with pharmaceutical companies, for example, we would look at specific disease outbreaks or prevalence of specific diseases in certain areas. So they could equip their marketing teams to be able to focus and hone in on the populations that were most effective, being able to deliver treatment drugs to populations that needed it. And they did this by understanding the clinical data, because oftentimes it's very difficult to get that from healthcare providers like doctors' offices and HIE systems. And so by providing those insights, which they of course were willing to pay for, we were helping them treat populations, understand and treat populations. Similar with insurance companies, where they're looking to not only improve their workflow, but they really wanted to understand population insights so they knew how to better equip their provider networks to serve the population's needs. For patients and for healthcare providers, it often looked like providing a layer of analyzed information on top of the raw clinical data. And so they were buying into the ability to quickly understand the history of a patient, but also understand what the data meant instead of having to go through it piece by piece, which is often how it works. And then in healthcare facilities, where there is a lot of requirements on compliance and workflow, and so they're actually willing to pay for data management solutions that allow them visibility and insights on what's happening in order to hit specific compliance metrics that can get them funding. So that was where my experience started, was in healthcare. From then, I've worked in many sectors and advised companies all over. Gulp Data is an industry agnostic lender. And so this is just one of my favorite use cases from personal experience, was turning lab data and clinical information into valuable insights for all of these different healthcare stakeholders. So I'm going to take a quick step back and talk a little bit about the data markets. So I have two slides here, some with like conflicting information, this one and the next one. But basically what it's showing is that there are these many layers of the data market with a ton of capitalized buyers in each segment. And so when we're talking about direct monetization, that's when you're trading data, a data product for money or other goods, you're looking at it really from three lenses. You have your marketplaces. Those are where you are going to get the lowest value for the most standardized product, but typically have the highest volume of subscriptions, of annual subscriptions. And then you have data brokers, who are oftentimes your data aggregators that will purchase data, aggregate it into other products, and resell it. And you'll get a higher price per data unit, if you want to look at it that way, than you will on the marketplaces. But it takes a little bit longer to make the sale, right? And so you have a slightly longer sales cycle. And then you have private buyers. Private buyers are what I described in my experience, where you are creating these essentially custom data products for specific end users. They might be competitors, they might be partners, they may be vendors. I have a lot of examples for you. But you're oftentimes going to sell the highest, you'll have the highest subscription value, but the longest sales cycle. And the interesting thing about data is that you don't have to choose one. Unless you're in an exclusive license, which is very rare for data, for a data licensing contract, you can actually sell data multiple times over in multiple places. And so that's where we start to look at a very unique opportunity with data sale. It's unlike really any other asset. And so you have the opportunity to sell on a marketplace, but also in a private sale as well. The trends are strong across the board, whether we're looking at data markets or data analytics. What's happening and what has been happening for the last few years is that a lot of organizations have started to look for ways to derive value from data, whether that means direct monetization or indirect. They're using it for internal purposes. And so what is naturally happening is that the market is rapidly expanding. If you're working in a smaller smaller company, what is likely happening is that the executives are beginning to think about how to utilize data and play a part in this. If you're coming from a larger organization, it's likely that this strategy has already, been in the works for a number of years, and maybe they haven't reached data monetization yet, but they're working towards that by optimizing and updating infrastructure. All of this is part of the journey. And so in a way, if you're working for a smaller organization, they're typically more agile and able to make these decisions quickly and migrate data assets quickly, and begin to play a role in the data market. Good so far? I want to establish that there are many liquid markets for data. So this I borrowed from Doug Laney. I have a few references from him. He's one of the thought leaders in the data space, and he works with West Monroe. So this is part of one of their data strategy initiatives. They gave me permission to share it here today. And so this is 12 reasons to know the value of your data. And there are a bunch of examples here, but what I really want to highlight is it comes down to a few things. And so data is often used and most useful in a few scenarios. One is to support executive decisions, making business-wide decisions powered by information that's available. The other one is to improve accounting practices or business operations. Maybe you're conducting a cost analysis on your data center. And so what you're going to start to do is balance that with the potential revenue and value that those data assets can bring in order for them to offset the cost center that it's creating for the organization. And so that's a very good reason to know the value of the potential value of the data or the value of the data. Some more tangible examples are when you're doing an enterprise valuation. It can be for an M&A, it can be for a capital raise, maybe a pre-IPO process, an audit process. And what understanding the value of data means is that you can actually increase the enterprise value during that transaction. Potentially, it will give you more bargaining power when you're going to the table and negotiating. Another way that it's been used, this is beyond, just generating revenue, but a reason to know the value is because companies now are actually creating separate holding companies for data assets and being able to tax optimize the business or increase enterprise value by creating a company that sole purpose is to hold and analyze or work on the data. Any questions here? There's I don't know who's in the room, so there are a ton of use cases of why you should know data. By the way, before I go in, and I'm going to talk a little bit about Gulp later, but one of the reasons that data value or intangible asset valuations have been so inaccessible for so long is because they took a lot of time and resources to complete. So when you're looking at data assets, oftentimes what it means is that you want to do an intangible asset valuation so you can bring that value as part of a larger enterprise valuation. And so for the middle market, you're really forced to work with some of the largest consulting firms. And it costs a lot of money, hundreds of thousands of dollars in some cases, and it takes months of your time and executives' time to just get some answers about the value of this information. And so one of the largest hurdles that we had to tackle when we were first trying to underwrite data as an asset in order to extend loans on that asset was being able to quickly and reliably value data. So Gulp data actually does market comp values, meaning we take from this marketplace section. So we're pulling transaction data off of all the different marketplaces, and we've created machine learning models that value data in real time for the current market value of that data. And of course, that changes day over day, week over week. So it's a very different approach than looking back at the cost-based analysis of what did this cost and what will it cost to maintain and what's the potential revenue based on current revenue. It's a totally different spin. but it's how we are able to value data and make recommendations on improving data posture. All right, so now I'm going into the stories. So we're going to talk about three main types of data today. It's the data monetization. It's indirect, direct, and collateral as an asset. And most of it is ethical use. None of this is, it's all ethical, but some of it is extremely ethical and some of it is just a good business case. But I want to cover some really cool use cases for data. So there are some common data monetization myths that you really need to be a data company in order to generate revenue from data. That data should be this free product that you offer to your partners to, sweeten the relationship. That you can only monetize data if it's your core data that you've gathered from your business. All of these things are not true. It's what a lot of people believe about data monetization, but it's not the way that it works. And so Dollar General in 2013, they were at that time like a $16 billion annual sales company, reported a partnership with 1010 Data. So historically, Dollar General was using the data and the billions of transactions and records they gathered every year to determine things like store hours, purchase pairs, what products are being purchased together, restocking. And this is a great example of indirect monetization. But what they started doing was they started selling the analyzed data in the form of insights to suppliers like Pepsi and Unilever. So Pepsi and Unilever were now buying the ability to see how their stuff was selling. And then if they paid even a little bit more, they would be able to also see how their competitor stuff was selling too. This is a genius move by Dollar General. They built an entire product out of the byproduct of their operations. They made it into a SaaS product. And at that point, data and analytics became a revenue driver rather than a cost center for the company. And so I want that to set the stage in terms of how you think about how companies use data and monetize data, because they were doing both. They were originally using it to optimize their operations and understand their customers, but then they turned around and sold that same information to their vendors and partners, and still do today. And a lot of companies have copied the model. All right, so stay with me here. This one gets confusing, the Georgia Aquarium specifically. So indirect monetization. Indirect monetization is when you are using data to improve your operations, improve your sales, come up with new products, improve your business relationships. You're not directly selling your data assets in any form, nor are you exchanging them for another service. So Georgia Aquarium, similar to Dollar General originally. They opened in 2005 and they had 3.5 million annual visitors and really boasted about the fact that they didn't need a marketing strategy. Probably had to do with the fact that Georgia Aquarium was like the first of its kind in the Southeast. Just 2 years later, they dropped to less than 2 million visitors. And both the first-time visitors and the repeat visitors slowed. So the aquarium started spending money on adding attractions and exhibits, very expensive, and it did absolutely nothing. So a board member who was actually a trained statistician determined that it wasn't because they weren't bringing enough visitors, but it was that they weren't bringing the right visitors. And this was key in the turnaround. So the company dug into the data. They analyzed the top postal codes of the visitors and the highest revenue season pass holders to create demographic profiles. And they created demographic profiles of the highest spending pass holders, annual pass holders. They then identified postal codes with high concentrations of similar residents demographically and households that matched that with a media campaign. This media campaign cost them an additional $700,000 in their budget. But within a year, the attendance grew 10%, revenue 12%, and season pass renewals 10%, which is an $8 million gain. So a pretty incredible example of how you can indirectly monetize information. Walmart, this one's shorter, don't worry. In 2011 came out with like their smart search on their website where you would type in hose and it would like give you an example of like a dog house. It wasn't very smart. But a year later, they had like a high cart abandonment. It wasn't doing that well. A year later, in 2012, they initiated a 10-month project. I don't remember the name of it, but it was 10 like data scientists. And what they did was they built Walmart's first social genome into their website search engine. And so what it did was it took into account trending topics and social media platforms to improve search results. Immediately, it increased sales on the website by 15% and lowered the rate of shopping cart abandonment. And at Walmart's scale, that means billions of dollars a year. So they didn't sell data, just using it internally. These are some samples. That's actually a very good question. I'll answer that one at the end, Arnold, about the revenue data that data could generate. All right, so now we're going into direct monetization. Oops, sorry. So one example of direct monetization, everyone knows Kroger. They are the primary, grocery store for households in the US, like 60 million households. Right now, they're in the process of increasing that with a merger with Albertsons to about 84 million. They directly sell consumer shopping data, and it's reported that's about $150 million annually. The company plans to increase that to $1 billion annually in just data sale. And so that is a perfect example of direct monetization. Is it a prime example of ethical data sale? Probably not, but it's not unethical. It's fine. It's part of their business operations. Maybe they can keep the prices of groceries lower because they're able to generate revenue from other sources. So you can look at it that way. But there are some really amazing ethical data products on the market. And I wanted to talk about the two taboo industries, financial services and healthcare. They come up a lot. Like, I want my data protected. I don't want anyone to know anything. It's full of PII, personally identifiable information, or personal health information, PHI. And that's just not the case of how most organizations are directly monetizing this aggregate level data. So there are, just a quick metric here, there are 50 million consumers in the United States that are considered credit invisible, meaning they wouldn't be able to access typical lines of credit because they don't have the typical metrics. And so what we're starting to see for the last few years is there's a real uptick in acquisitions of alternative data companies. Companies like Finicity, Factor Trust, by companies like Experian and TransUnion. And the reason is because they're beginning to incorporate some of these alternative data metrics into their underwriting and creditworthiness process, which is very exciting because it supports financial inclusion. So here are three examples of companies. The first one is a company that is an SME that extends capital to like mostly mom and pops, but to small and medium-sized businesses. And it uses, instead of like a personal credit score or a bank credit line, It uses data related to purchases to extend MCAs, merchant cash advances, to customers. And so it's an innovative way to use alternative data. The second two are consumer. And so for people who don't have the typical metrics for creditworthiness, this is using rental payment data. So have they made all of their rental payments? And it taps into that to allow them to build credit history and maybe apply for a mortgage or increase their creditworthiness in the eyes of some of the large credit bureaus. Fairbank, very similar, uses AI to look at transaction history and a few other social genome items to provide digital lines of credit or instant lines of credit digitally. So some of my favorite use cases are in the financial services, because there are so many people that don't fall, not just in the US, but globally, that don't have access because they don't fit a specific profile that traditional banks and financial services are looking for. And so it's really played a critical role in financial inclusion globally. Another one are the healthcare examples. So people think of like Epic and Cerner and United Health and Humana and all these other major players in the healthcare industry that they're, monetizing my data, they're making money off of me. I mean, it's true, they are monetizing data assets, but they're doing it in a way that advances healthcare. And so for a tool to provide predictive analytics to a doctor or to a patient, it's helping them treat and predict and prevent diseases. So here are some amazing examples. I could go on and on about healthcare, but I won't. There are a ton of ethical data sale examples in the healthcare industry, and they've really advanced our ability to predict and prevent disease, chronic and acute. All right, and the third item is collateralizing data. I already gave you a lot of this, but this is a third way to monetize data assets. We are the first company to serve the SME market. I'm going to quote Doug Laney again. He wrote a Forbes article some years back, right after COVID, actually, after the airlines had used their customer rewards, the frequent flyers, for a loan during COVID. And that's a great example of how a large corporation has access to services that allow them to use these intangible assets to access capital. But it hasn't existed for the SME market. And so that is what we do. Gulp Data collateralizes data, so it values it quickly, and collateralizes it to extend loans on those data assets to allow companies that may not have data revenue today to potentially fund a data project or some other part of their operations. And so they get to see value in the assets that they've built without being forced to monetize them, because that does take time and resources. All right, I'm almost done talking. So quickly before I go into resources and wrap up, data journey, it's a process, right? And so if you're working with a company or you've built a company that doesn't already sell data as a product or data as a service, then there's typically a lot of work to do. And the newer the company, usually the easier, because there's less debt there. But it often looks like we have silos of all this like random data. And it really takes the executive level decision to allocate resources to start to investigate what we have. And so it's really a discovery process at the beginning. We need to standardize how we're storing the data. We need to standardize infrastructure environments. And then we need to start to standardize the formats and normalize the data across all of these different data centers, and understand how we could potentially use it by normalizing it. I don't know if assessing compliance risk is here, but I put it here, so I'll talk about it. At that point, you begin to understand what you have, and it's much easier to move into a compliance, into a compliance process where you're really assessing the risks and the gaps in your security strategy, probably, to start to fill those gaps. And so you should definitely do that before you start putting data onto marketplaces or even with private buyers, and probably they'll require it anyway. But it can only happen after you've understand what you have. And then I always like to categorize data assets. So I didn't call it a trash can here, but usually you end up with a trash can of data. That's data that it's such a mess, but we're going to store it here for now, and we know it's not usable. So that's not immediately usable, but may be useful in the future. If I've learned anything from working with large organizations, it's don't throw the data away. It could definitely have value in the future, and cold storage is very cheap. And then you have normalized data. That's data that you might use internally. Data that you may use in the immediate future. And then you have research ready or product ready data. And that's data that's really high quality. Maybe you've done some data mapping or some additional analytics on that data. And I call that research ready data, probably because that's what all the research institutions used to want, but it's product ready data. And then from here, it's really easy. You've done all the work. And so it's really important to start, just start your go-to-market. It's so interesting because data, unlike any other product, is a very quick go-to-market. You have a ton of resources, and I'll talk about those in a second, to get you up and running quickly. There's absolutely no need to build an entire product in order to start selling data assets. And as soon as you start selling those or trying to sell those data assets to some of your partners, which is a great way to start, some of your vendors potentially, or some of your clients, you move into this feedback loop. And it's a very iterative process in the beginning where they're telling you something, you're like, okay, let's make those changes. And so some of these off-the-shelf tools help with that rapid iteration. So some of those data product go-to-market hacks, I love using existing clients. So just like Dollar General, they used existing relationships to proof of concept and then sell. So rather than going out and trying to capture a new segment, you're tackling relationships that are very low-hanging fruit because you're already selling them a product. You already have this relationship, you know how they work, you probably know some of the pain points that your current product isn't offering, and you know how data can play into that. And so that's a great start if you have that built in already. And then I also like to encourage companies to catalog multiple data products. I mean, once you've done the work where you can get this data into an ingestible format like S3 or CSVs or however you want to offer a data as a service, do it multiple times. And so you can create all of these mini products and start listing them, and you'll get very quick feedback from the market, which is important, and it hasn't cost you much time or effort. I'll plug Gulp data a little bit there. So we actually catalog data products when we run our valuations. We take the market comps, and we are able to to show which attributes can be added to the data in order to increase the market value of that data. And we're also able to break it down into products and show the landscape of potential buyers based on who is listing the data in the marketplaces. So that's one of the very cool use cases for the valuations, but it helps you quickly catalog products and get them out there so you can test them. And then don't build initially, never build a dashboard. Use, like, I don't know, if you're Amazon, you use QuickSights. If you're Azure, use Power BI. Not as fancy as like Tableau and some of the others, but it gets you a visual product quickly, and clients like visual stuff. So you have, you have all these insights, they're going to be interested in. If you explain it without showing it, it's going to not land as well as if you were to show it. And so don't build it, just put it into a BI tool and show the analytics that way. Brand it, make it look cute, but it's very effective sales tool. I don't have anything else. I am going to follow up with some better resources afterward. I didn't have time to finish it, but I will circulate those with the team, and then I assume they'll reach you guys.
Yep, absolutely. That's exactly how that works. So Lauren, thank you so much. I know we do have at least one question. How do we evaluate the revenue data could generate?
Yeah, so this is a good question. So historically, it's been done from something called a relief from royalty model, and I'm not going to pretend to be a financial expert here, but basically what that does is it takes your revenue and makes some assumptions and adds in some tax discounts, and it projects what the potential revenue is. From our perspective, I mean, that's how it's done, right? Like that's just how it's done when you're doing a typical valuation. From the perspective of Gulp data, it's not so effective because probably data has not been part of that revenue strategy. And so it's likely not that precise. So we base it on the base market comp value, and we actually divide it down into subscription. So based on your data set that has X number of attributes, like 350 attributes, this number of records, and it has these specific attributes, it has a base market value of, let's say, 500,000 and a subscription value of 200,000. And so you begin to build revenue multiples off of those baseline numbers.
There is a question right as I say that. So can you clarify again the process of ethically selling medical data? And I think that's a kind of a loaded question, but if we could break that down, I think it'd be good.
Yeah. So, I mean, oftentimes medical data is sold in aggregate format, in an aggregate form. And so think of it like, I'm not looking at Lauren Cassio's visit from this time. What I'm looking at is I'm looking for like upticks in specific diseases, or maybe lower rates of screenings for cervical cancer and HPV. And that is oftentimes what marketing divisions and research divisions are after. They want to understand why, and they want to target the appropriate populations. And so this immediately delivers service to populations that need it. And so there's this real misconception about how personal data is. I mean, this is not the black market for data, right? These are real analytics and insights that large corporations are purchasing in order to improve outcomes. Of course, it improves their own outcomes as well, as they're able to more effectively target and market, but it also improves the outcomes for the end user, in this case, the patients. And so I think that's a prime example of ethical data monetization. That's why I picked financial services and healthcare to discuss, because so many people have these misconceptions about how that happens. It's not selling like credit card numbers. That's not data monetization in those sectors. that is black market. And so, yeah, it's one of my favorite. Healthcare specifically will always be close to my heart. But yeah, one of my favorite examples of ethical data sale.
Great, great. Well, Lauren, thank you so much. We really appreciate you, and I know I think Chris joined, but Chris, nice to have you here. I know we didn't chat much, but Lauren, again, thank you so much.